President Donald Trump is expected to announce a trade deal with the UK economy just a month after Liberation Day. While details remain uncertain, such as which industries have been discussed and whether there will be more rounds of negotiations ahead, any progress could be more than welcome by global traders, by global markets, and particularly by pound traders. But that's not all. The US and China will hold their first round of talks on Saturday, and that event could still the show as tensions between the two sides have been significantly weighing on global stock markets and have been pushing back rate cuts, particularly in the US. The Fed kept interest rates steady during their meeting yesterday on Wednesday. But it increased the case of stagflation, so any developments there could spark fresh volatility as well, particularly the start of next week. So with us traders expect huge headlines. It will be quite interesting to see what the technical signals suggest. This video I'm going to break down pound yen, gold, and the US 100, or otherwise the Nasdaq 100 index. And starting first with pound yen, we can see that the pair has been trending upwards following the drop to 184.36 a month ago. Currently, the pair is trading around its 200-day moving average near 192.20. And what we are expecting to see is whether this upward move could break above the key resistance of 194.70. This resistance line as well as this longer-term falling line are both located here. The 50% Fibonacci retracement level of this downfall is also within the same region, so a break higher could cause significant volatility and could drive the price trade to the next barrier seen around the 197 mark. This is where the 61.8% Fibonacci level is located, while higher than that, the price could reach the 199.80 constraining zone. Well, if we look at the technical indicators, we can say that the short-term risk is skewed to the upside. The RSI has rejected a drop below its 15 neutral mark. The stochastic oscillator is set for a positive pivot. So all this suggests that positive momentum could stay in play. Nevertheless, if the price reverses to the downside, particularly if a trade agreement between the US and the UK disappoints, then we could see a break below the key floor of 190.70. The 38.2% Fibonacci mark is cementing that support. Failure to hold here and a break below the 20-day moving average could drive the price straight down to 185.60 and at 186.70, where the price bottomed out back in April. We can see that there are a couple of trend lines within the zone, and particularly the one that connects the lows from August 2024 and April 2025. So another failure here could confirm additional declines, likely towards the 183.30 territory. Now looking at gold, gold faced the pullback yesterday. It managed to close above April's closing price slightly, though, a couple of days ago. But then downside pressures came back into play, and we can see that the precious metal is now heading towards its 20-day supportive moving average seen around 3,300. And where the support trend line over here from April's lows is also placed. The 38.2% Fibonacci retracement of this uplift is within the same region, and there are more constraining trend lines around the same territory above the 3,275 zone. So failure to pivot here may put more pressure on the precious metal, likely taking us down to the 50% Fibonacci mark of 3,232. Lower than that, I expect the next support to emerge around the 3,163 level. And then the 50-day moving average, along with this long-term constraining line could also hold downside pressures in control around the 30,120 level before the 30,180 territory comes into view. This is an area that coincides with the support trend line coming from the end of 2024. So a break lower from here would downgrade the short-term outlook and would be a violation of this upward trajectory. Well, as we can see, the price has completed a bullish pennant pattern over here after this steep upleg, so that signaled a bullish continuation. Of course, we see a short of correction, but overall I'm still positive about the precious metal as long as we hold above the 3230 territory and above the previous lows. If we look at the technical indicators, we do have some cautious signals. The technical indicators are pointing to the downside. The stochastic oscillator seems to be changing direction just around its 80 overbought level, and the MACD remains below its red signal line. So the technical indicators are a bit cautious about the next price movements, and nevertheless, any downside corrections wouldn't cause significant concerns unless we break below the 3232 territory. Now, in the event of a bullish breakout, if the price manages to recoup its recent drop and surpass the 3437 region, then we could see another test near the 3500 psychological mark. This coincides with the 261.8% Fibonacci extension of the previous downfall, while higher than that, 3550 and 3600 psychological mark could be the next target. And now, finally, looking at the US 100, or otherwise the Nasdaq 100 stock index, the recent upleg has brought optimism back into play, but overall, I'm still skeptic about this market, particularly as long as we hold below the longer-term exponential moving averages, the 200 exponential moving average at 20,220, and the 100 EMA at 2000 500 level. So this territory over here is still keeping the market within the cautious territory, and any downside corrections are likely. We have mixed signals. If you look at the technical indicators, the RSI is rising above 50. The stochastic oscillator, on the other hand, is pointing to the downside. So there are mixed signals, and therefore it would be, therefore some caution could remain, particularly if we hold below these lines. Now a successful penetration higher could draw the price straight to the 21,000 psychological mark. That would be a huge progress. While higher than that, I expect the price to chase its recent all-time highs around the 22,000 psychological mark. Well, another bearish signal is probably this rising triangle over here. It looks like a rising wedge, which is technically a bearish signal, a bearish pattern. So this pattern suggests that the price is expected to dissolve this triangle on the downside. So if we see, if that case materializes below the 19,770 mark, then the price could retreat to the 23.6% Fibonacci mark of 19,425. While as we can see, there is another key former support trend line around this territory. The 50-day moving average is the exponential moving average is also placed here. So a break lower than that, and particularly a close below the 20-day moving average, currently around the 19,130 level, could disappoint traders, could trigger faster decline into the 18,472 and 80,700 region. So that's all for That's all from me. I hope you liked my video. Keep a close eye on the headlines as we expect more developments on the trade front, which have been a key catalyst for global market movements. We'll be back, of course, next week for more updates. So stay tuned, and we'll be back soon. Thank you for watching, and see you next time.